Good evening, good evening, good evening. Is there anybody in here? Anybody in? Okay, I see here to learn to share. I see Deborah. What's going on, y'all? How y'all doing? How y'all doing? Yeah. What's going on, good peoples? Good peoples. All right. For anybody that's a part of the Discord, I am live in the Discord. I am in the voice in the Discord if y'all got anything for me. Let me do this and we gonna get started. How y'all doing, man? How y'all doing this evening? What's up, Tish? Tish, don't be scared to go in the Discord. I ain't gonna call you out. What's up, FC? What's going on, FC? Let me share my screen. And we gonna get to it. Can y'all hear me okay? Tish laughing, so I'm FTT sucks. What's FTT? What's up, Sage? Thanks for sharing. What's FTT? Oh, they suck? Why? What they do? All right, Deborah. I can hear you typing great. I hear you going. What FTT do to you? They didn't pay you out, or they just trash? I don't know why I got it. Ain't nobody in the Discord, so I don't need to have these headphones on. Right. So I ain't gotta have the headphones on because ain't nobody in the Discord and ain't nobody gonna be talking. What's up? What's up, the Blackout? They a scam. Okay. What did they do? They scammed you? What did they do? What's up? It's my time. It's my time. It's my time pulling up. It's my time is official gang now. Y'all give it up for It's My Time, man. It's My Time is official gang now. It's My Time been pulling up. Y'all don't mind me. I'm just trying to get this headphone cable back over here out of the way so I can sit this on the corner of my desk. Y'all give it up to 4,000 people waiting on payouts. I don't know. I don't even know. Y'all give It's My Time be pulling up. It's My Time is official gang now, man. Pulling up every day. We pop up on the live. Be pulling up. Sometimes be asking hard hitting questions. Be participating in the chat without the buffoonery. Just fall in regular gang. Pulling up. Not with all the foolishness. Hey, man. It's my time. I hope you're a female. It's my time. With that little heart, lovey emoji, you better be it's my time. Are you a female? Are you a female? It's my time. I don't care nothing about getting canceled. Are you a female? It's my time. With that heart round the face emoji. Okay. All right. Just want to clear that up. Because if you wasn't, I was going to be talking about you for the rest of the live. According to Uncle Clifford Rules 372, a man shall not use that heart face smiley emoji unless he texting his wife. Hey, Let's get to it. Hey, oh, wait a minute. I'm rusty. Good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. And I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If by some small slither of my imagination, you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spider if you don't hablo Espanol. See, Big Spider on my shirt too, gang gang. And you are now in tune to another episode of the Intra-Day Price Action Review. Man, my brother got his government name on the screen. But you can tell when people warrants get clear, they come out there with their government names on the screen. What's up, Long? What's up, Lil Hawk? Hey, let's get to it, man. This morning, we had a public tape reading session. Hopefully, y'all was able to glean something from that. If you got questions in regards to the tape reading session this morning, if you was live or if you happen to catch the replay, feel free to drop it in the chat. If you are in the Discord, feel free to jump in the voice and say, hey, Tim, I got a question in regards to that. Now, this afternoon, we're not going to go back to the 6:30 up until 9:30 because we covered that in the tape reading. We're going from 9:30, going from like 10 o'clock up until the New York close. All right, everybody tracking, everybody know where we going. Okay, good. All aboard. Let's mark 9:30. That's the New York Open right there. All right, we had covered this right here. We had our new week opening gap. That was up there, right? We were saying that was the magnet for price. We're just doing a quick recap. We had these relative equal highs right here, and we said that was a magnet for price. We said at the time of going into the 9:30 open, right, we were kind of hovering around, right, the middle of our entire range. So we were like, you want to be biased. You want to be neutral until you get something from price, right? We got a change in the state of delivery here in price, right? Right at the 9:30 open, right? We got a change in the state of delivery right at the 9:30 open, right? This 15-minute candle right here as we traded up, that gave us our change in state of delivery. We said that's our change in state of delivery. We want to see this act as a balanced price range. We dropped down to the 1-minute time frame and we pointed out possible entries right here at the change in state of delivery, drawing to the relative equal highs, drawing to the new week opening gap, which was that's a magnet on price, that's a magnet on price. And then we had a daily high that I said, hey, I would like to participate to this daily high, but I wouldn't want to buy it until we got a retracement back, right? We hit the daily high before retracing back. So the longs was off the table for me after taking out that buy side, right? Then I will be looking to go short back down into the range somewhere and possibly taking out this low. We got all the way down, left the low, and then reversed all the way back up to almost to the high throughout the day. Right now, let's go and dig into this price action here after we took the buy side on the daily, right? The daily buy side would have been here, right? After going up into the daily buy side, and then we're going to go from there, because that's where we left off on the live stream. Buy side liquidity. Let's put box top day so we'll know what that is. Box top day. Boom. Okay. Now, here we go. We got the box top day. Okay. We got the relative equal highs right there. And we got that sell side that was resting down there. The sell side liquidity that was down there. Okay. Let's make these fonts a little bit bigger so y'all can see what a going zone on the chart. Okay. Then that was out. Let's take this other, let's go into replay mode and take it all up to 4 o'clock. Right. So we'll go right That's the 4 o'clock candle. Boom. That right there, that's up to the New York close right there. Okay, so let's look at the 15-minute real quick. Let's mark out. We're using the benefit of hindsight and marking out PD arrays that we want to pay attention to. All right, so we come here. Is the space? No space there. All right, so we're gonna go right to put it to here. We're gonna end. I'm ending it here. Well, let me show you what I'm doing. Right, we're gonna mark out this right here as a fair value gap, and I'm gonna not extend it to the right. Right, I'm not extending it to the right, and I'm ending it right where the imbalance, where the inversion fair value gap happened. Right, so when this candle here, when this 1045 candle closed, this inversion fair value gap was created. So I'm stretching it out and I'm stopping it to where this candle closed. So I know anything to the right of this inversion fair value gap is after, excuse me, is after that inversion fair value gap was made. Right, so anything from to the right of this, like when we go to a 1 minute time frame, show you what I'm talking about. Because when you drop to the lower time frame, sometimes it's kind of hard to determine, hey, when was this PD array made, right? So I stretched it over to stop there, so I know that on this candle right here, that 1059 candle, that's when that was made. So from this green candle this way, everything happened after this was made. So we can say this 1 minute candle right here is reacting off of this inversion fair value gap, because that inversion fair value gap exists now, right? This push up here is not reacting off this inversion fair value gap because it doesn't exist yet. This push up here is reacting off of this 1 minute SIBI. This fair value gap doesn't exist yet, so it's not reacting there. So you always want to know when you drop to your lower time frame, you want to know where you are in price on the higher time frames, especially when you're looking back in price, because sometimes like it can look like, hey, we're reacting off that inversion fair value gap, but it's not an inversion fair value gap yet. Okay, we're on the bottom side of the bullish fair value gap, but at this point in time, we don't know if it's going to be an inversion because pricing just keep pushing back up and don't create an inversion fair value gap. Right? Get it? Got it? Good. All right. Y'all ain't know it was going to be a teachable moment, did you? You didn't know it was going to be a teachable moment. Okay. And then we got that was our change in the state of delivery right here, right? That was our change in state of delivery from that morning, right? So let's do this right here. I'll do this. I'll just put that was the change in state of delivery from this morning. I'll leave it there. What? Wrong one. Black. So instead of putting change in state of delivery, that was our change in state of delivery this morning, but now we're just going to call it our bullish order block. All right, we're just calling it our bullish order block right now. And that was on a 15-minute. Okay. And then and then since we got this little pause here where we went up on that right there, this little almost a doji candle, since we got a little pause there, I'm going to come here and mark out that right there. Bullish order block. since we got that little almost doji candle in there, right? We came down, had a little shift in sentiment, pushed back down, then traded back above it. Boom, right? All right, what makes that an order block? Because price came down to an anticipatory reactionary point right there. That's a low, right? Came down to it. It ain't got to come all the way to it, but it came down to it. Had a shift in sentiment, meaning it traded back up, and then it traded back down, and then we reversed and closed above the high of that, right? Bullish order block right there. Same thing with this one over here. Okay. Get it? Got it? Good. Okay. So now, and then on this here, we will put right there. Okay. All right, so we got everything marked out on the 15-minute as far as what we want to mark out. Now, let's go down to the 1 minute. All right, going down to the 1 minute, and we're watching price right after 10. Okay, so this is 9:30, right? And this is 10. Right, so that's our opening range. We watched price today, and everything transpired in the opening range right there. For those who remember, this was the area of the 1 minute fair value gap trading back down into this 15-minute order block. That was our change in state delivery right there. That was the move right there that took us up to the magnet in price. So we said we're gonna start from here. All right, so this is the opening range, right? This is our 30-minute opening range right there. Okay, let's look at some key information on the lower time frame for our opening range, right? So for our opening range, right, from here to there, right, everything inside this opening range right there, these are PD arrays you want to pay attention to, just like during a macro window, right? So during the opening range, let's look and see what we did there. So during the opening range here, during the opening range there, we had this right here was our first presentation, right? Our first presentation fair value gap, right? Fair value gap first of session, right? That was our first of session right there. Okay. That was that 15-minute inverted fair value gap that we have marked out. Okay. That was our first of session there. Since we got a busy there, we're going to change that color. We're going to make it no, that's too close to a balanced price range in my mind. All right, we'll make it like that grayish color there. Okay. All right. First of session fair value gap, and that's off of the 935 candle. For anybody who don't know what the first presentation is, or what the first of I call it the first of session. Michael gave it a fancy new name in the 2024 mentorship, called it the first presentation, right? That's the first fair value gap made after the 930 open. You don't count the 930 candle, so from 931 on, you look for the very first fair value gap made. That's your first of session fair value gap. That fair value gap is important, right? You would want to stretch that out throughout the entire day, right? You want to stretch that out through the entire day. So we'll push this over all the way over there to 4 o'clock. Right, that's our first of session right there. First of session can act as a magnet on price. Also, new week opening gap can act as a magnet of price. First of session can act as a magnet of price. Yeah, different things act as magnet of price. Just know that. Okay, so we got a swing low inside the first of session, right? What do we say about swing lows? Participation time. What do we say about swing highs and swing lows that rest inside of an imbalance? What do we say about that? That's what to the algorithm, right? That is what to the algorithm. Whenever we got swing lows and swing highs that reside inside an imbalance, what do we say about that? We say that is what for the algorithm. Put it in the chat. Put it in the chat. What do we say about it? Somebody come in the Discord and talk to me. Marco in the Discord. Marco, what do we say about these swing highs and swing lows that's inside a imbalance? That's what to the algorithm. Yummy, Deborah. That is just yummy. The algorithm is just chomping at the bit to go get that liquidity, right? So we got a nice draw on liquidity right here. Okay, did the wrong thing. Let's come here, and then we're going to make this internal with a dotty, right? Buy side internal. I got a lot going on right there in that spot, so I'm going to take away the middle line on that, and I'm going to take away the middle line on this fair value gap from 15 minute. All right, and so now that dotted line right there is the internal buy side for the algorithm, just looking at it like scrumdiddlyicious because it's inside that fair value gap, the first presentation. So we got a high probability magnet on price with a swing low resting inside of it, right? So what else we got going on inside the opening range, right? From there, we're just continuously building up. What do we call this right here, right? Coming down here, like, what is this right here? Right? What is that right there? What type of liquidity is this right here? When we're continuously making higher highs and we're not sweeping out any sell side right here. Trend line, right? We're building up this trend line liquidity, right? We're building up this. What's an LR? Here to learn to share. What's an LR? We're building up this trend line liquidity. We're not taking out any stops, right? We're not taking out any stops. So let's put on our magic. Oh, Tim, I thought you didn't use indicators. What is that you got on your screen? It's something to make it more visible. Something so they're better for me to see you with. They're better for me to see you with, my dear. Better for me to see you with, my dear. Okay, so this right here, right? We just building up this trend line liquidity. We pull back down into that imbalance there, right? And so we're moving up now here. This is our 950 to 1010 macro. Right? This green shaded area here, this is our 950 to 1010 macro. Right? So moving into the 950 to 1010 macro, right? We're continuing to move up, right? We take out external liquidity, move back to internal liquidity. Take out external liquidity, move back to internal liquidity. Take out external liquidity, move back to internal liquidity. We're inside the macro now, right? We dilly-dally for a minute, right? Coming to the 10 o'clock hour, right? Get a quick fake me out to the downside, and then we push up and spool up to that prior day high, that we said we wanted to try to take apart in going to, but we wanted to get a pullback first. Didn't get it. Didn't get the pullback. Shot straight up there during the macro time. So during the going into the macro time, we traded up into there. And speaking of the macro time, we create a bullish fair value gap right here in the macro time. All right. We create a bullish fair value gap here in the macro time on the 1 minute. God dog it, Tim. Right. Bullish fair value gap on the 1 minute. Right. We poke above the high. Right. Create a high. Consolidate on top of the bullish fair value gap. Trade back down into the bullish order block from the macro. Right. We can go body to body, or we can go wick to wick, depending on how you do it. It's not overlapping with the fair value gap, and the wicks are very small, so we can go wick for wick. Right. Right. For the order block. All right, so we trade down into the order block from the macro time, create an inversion fair value gap right there, hit the order block, right? Price displaces up here, right? Price displaced up right there. Okay, so now here we go here. We push up above the high, right? Trade back down into the order block. Push up above the high again, right? And then create another bullish fair value gap. And then we came very close to inversion fair value gap there, right? Create a SIBI right here. I'm not marking everything out. I'm just going to mark out. So it's going to start getting too jambalaya. Right, so we create a bearish fair value gap here on this 1021 candle, right? Come over here, drop down, create the inversion fair value gap right there. Okay, we got the inversion fair value gap. Everybody tracking? Now that we got the inversion fair value gap, and this candle here did not trade back up into this candle, and then we created another bearish fair value gap there, right? Created a bearish fair value gap there. That let us know that the algorithm wants this to be what, right? Right. When this candle here gave us an idea that this was going to be something, then when we created that fair value gap right there, that was confirmation that the algorithm is treating this as a what? Marco. Breakaway gap. Very good, Tish. Marco ain't talking to me tonight, y'all. My feelings hurt. A teeny. It's a breakaway gap. He'll learn to share. This your inversion fair value gap over here. Right? This candle right here created an inversion fair value gap there, but I'm talking about this fair value gap right here, right? It's treating this as a breakaway gap. This is the confirmation that this is being treated as a breakaway gap, right? This candle here gives us the idea of, I want to see that left open. Why? Because we create the SIBI, and then we got a nice expansion down here. Right? Nice expansion down here. So that's saying, hey, I want to see that left open. And then that fair value gap right there, creating that fair value gap is saying, okay, he's going to be a breakaway gap, because that fair value gap created that fair value gap. Right? So now we know that's a breakaway gap. Okay? So now that we know that is a breakaway gap, we don't want to see price come back down into it. And we trade down, right? Trade back up into the SIBI, right? Traded back up into the SIBI. That let us know that this is a breakaway gap, right? Touched that SIBI, quickly moved away, dropping down, dropping below that low, dropping down into the order block one more time, right? Coming just above mean threshold of the order block, right? Pushed back up, right? Into the up close candle, wick down, closed. I don't know if it went up or down first, but we're respecting that right there, right? So we created a SIBI, created an inversion fair value gap, created a SIBI, right? Got a break in market structure, respect the up close candle, right? At this point here, after doing all of this, price did this, and this. What is that telling us at that point? At this point in time, we are pretty confident that we are in a what? We are in a what? At this point in time, we are confident that we are in a what? Sell program. Sell program. Sell program, Tish. Yes, we are confident that we are in a sell program, right? And we know that we are confident we're in a sell program because we are we're pushing through discount PD arrays. We're respecting premium PD arrays, meaning PD arrays above price, and we're respecting up close candles. That up close candle didn't get traded through. That up close candle didn't get traded through. That low got traded through. This inversion fair value gap, right? We melted back down and got back down on the bottom side of it. So here, if it was bullish, we would have wanted this to be a reclaimed fair value gap because we got on the bottom, created an inversion, went back on the top. And if you bullish, you want to see it be a reclaimed fair value gap. We didn't get that. Right through there. Melted right through it. Right? Why do we melt through it like that? Because we offered buy side. We offered buy side and sell side and buy side, then left it. Now, this is a balanced price range. Buy side, sell side, left it. Right? So we got back to it, pushed right through it. Right? Went right through it. Pushed back up to the top of it to touch that imbalance. Right back through it again. Right? Traded up into this down close candle right there. Let's go. Get out of there. Get back down. Right? Sell program is intact. Okay? Now, at this here, we hit the breaker, traded back up into the breaker here. Got a bearish breaker there. Right, so we traded up into this up close candle, respected it, created a doji here, didn't do too much of nothing, just kind of hung around there, fatting around inside the order block. Then this next candle here, we traded back up into the bullish breaker, right? Kissed the low end up. Wait a minute. We still got a little bit of fair value gap there, right? Right there, that fair value gap should be there. Got to include the volume balance, right? Traded back up into the bearish breaker right here, back up into that up close candle one more time, which is acting as a bearish order block, right? Traded back up into, right, this inversion fair value gap because we closed below it again, right? Pick your poison on the PD arrays that you're trading into there. Then we drop down and we close below mean threshold of the order block. Right, this candle here was respecting mean threshold of the order block. It's a 1 minute order block. So all these candles are respecting mean threshold. And then this candle here, we drop down, close below mean threshold of the order block. And somebody doing something wrong in that bathroom. Close below mean threshold of the order block and created a SIBI here. So we close below mean threshold, continue to give up the ghost, drop down below this sell side right here from the some sell side from the opening range, right? We got sell side there from the opening range, drop down below this sell side right here, sell side internal. Whoo, cheese and rice. Y'all hold on for a second. Okay. Hopefully y'all couldn't hear me talking, could y'all? Could y'all couldn't hear me talking, could you? I might have muted the wrong thing. Okay. All right. Am I back now? Y'all can hear I'm back now? Okay. Make sure I ain't mute the wrong thing. Okay, so we got all right, we got that sell side from the we got some internal sell side that was created during the opening range. We drop down below it, right, and wick off of it, right? Got a nice wick off of this sell side right here, right? But at this point in time, you don't want to get fooled by this wick. Excuse me, by wicking off of this sell side right here like that. You don't want to get confused by that. Why do I say that? Right? Can somebody tell me what's my favorite signature I like to see? Right? I need somebody to pull up in the Discord. Who in the Discord? We got Deborah and Marco in the Discord. Okay. One of y'all, Marco ain't talking to me, so my feelings hurt, but one of y'all tell me what's my favorite signature I like to see, right? And when did it transpire so that you won't get faked out by this rate in this sell side and then wicking off of it like this right here. Ready? Go. I'm going to move the arrow around while you talk. It's only two of y'all.
I know you like confirmation.
What's my favorite signature I like to see when price is moving? Right? We talked about this every day for the last week or so. What do I like to see the algorithm do? Trigger stops. There you go here, learn to shell. You got phone a friend, right? Trigger stops. Here, learn to shell giving you where were the stops triggered at. Nope, not at the order block. Where were the stops triggered at that started the process, right? Snatched wigs. When did they snatch their wig? Come here to learn to share, giving y'all all the answers. Huh? Okay, I'm gonna give you the first one. Here, we took out this high. What did we do when we took out that high? Right? What did we do when we took out the high? Speak to me.
We put people in longs.
Yes. The market has been trading
people
up.
In longs.
Yep. The market has been trading up, right? Deborah, stop this to the YouTube. You answering twice. The the market been trading up, right? So when we traded
Oh, I'm
above that
sorry.
high, breakout traders want to get piece of this long. So now they've been forced into the market. What happens right after we put them in longs? Like shortly after we put them in long position, what happens? Price does what? In the most eloquent way that He'll Learn and Share put it, when did they wigs get snatched?
The reverses.
Where is that? It's marked on the screen. Tell me what's marked on the screen that tells you that their wigs just got snatched.
Fair value gap.
What's on the screen that tells you that their wigs just got snatched?
Breaking market structure.
The break in market structure. Very good. So my favorite signature to see price, to see the algorithm do is, I like to see when I'm bullish or bearish. In this case, we're in an extreme premium, right? We just came to a daily anticipatory reactionary point, right? Price pulls back to this order block, blasts off, right? Creating a fair value gap, putting people in long positions, and then it immediately dumps and takes their stops, right? So now the algorithm has just shown me that they manipulated somebody. It put somebody in and then immediately ripped their face off, right? So now that it did that, now I'm like, okay, where are we? We in a premium. In a premium where? At a daily anticipatory reactionary point. Now, I want to participate with this short. Why? Because I have targets down here, right? We got this juicy sell side here inside this new day opening gap. And we got the actual sell side that we had marked out down here to conclude a possible market maker sell model, right? That was our sell side we had marked out way down there. Remember? Yes, you do. Okay, so that's my favorite signature. When we come to an anticipatory reactionary point, I love to see the market put traders in long or short, then immediately reverse and take them out, right? What do we call that? Speak to me.
A Judas.
A Judas swing, right? I love to see it. Le Judas. I love to see it. Boom. Right? So now we got the Judas swing, right? And this right here was our break-in market structure. Okay? So we already talked about, we had a breakaway gap, right? Another breakaway gap, an institutional order flow entry drill, a break-in market structure, right? What does an institutional order flow entry drill signify? It means that price is what? Very what? In this case, it's very what?
Bearish.
Very bearish, because we just barely poked into that fair value gap and got gone. Hit it, wicked off of it, and didn't even touch it again. Got gone. Price is exceedingly bearish. So it's giving you all these signatures, right? So now that it's giving you all these signatures, what do we do right here? Right? Remember what we said about this area right here? What do we say here? We said we had upside, we had downside, and then we left it. What do we say this area was right here?
Balanced price
A
range.
balanced price range, right? And then when we left it, right, we had buy side delivery, sell side delivery, right? And then when we left there, cut through that like butter, right? So now buy side delivery, sell side delivery, and left it. So now what is that price range? What is that area right there?
Balanced price
Balanced
range.
price range. So you got a balanced price range here, You got a balanced price range there. Prices let you know that because it cut through it. So it's confirming, yes, balanced price range. Okay. So now all of this here is a balanced price range, right? So by process of elimination or process of rightful thinking or whatever you want to call it, when price, you can just say everything in this whole area is a balanced price range because it's balanced. It was balanced there. This is balanced because we offer buy side and sell side delivery. Then we left it. We're back in that same range. We're cutting through it like butter. Balanced price range, right? We trade back up, get an institutional order flow entry drill and leave quickly. So now we got a very bearish signature inside a balanced price range. And now that we not only do we have a balanced price range there, now we have come back down to the downside of this fair value gap. So now we got an inversion fair value gap there, right? So we trade up into the order block, drop down, trade back and get an institutional order flow entry drill off of the inversion fair value gap. Or if you don't trade that, you have a breaker right there. Or if you don't trade that, then you look like you may have gotten picked up on the bottom of the order block. 513, the high of this candle. 512.75. Unless you was at the low, you didn't get picked up on the order block. Right? So then price drops away. You say, Tim, I don't trade inversion fair value gaps. Tim, I don't trade breakers. I only trade regular fair value gaps. Fear not, my child, because now that we see that all of this is a balanced price range, right? We do not anticipate price coming back up in here, right? We have a balanced price range there, and we traded back up into a breaker and got gone. Right? So price should not come back up in here because we're exceedingly bearish. Institutional order flow entry drill. Institutional order flow entry drill. Now we have a fair value gap right there. Right? We got a fair value gap right there. We trade back up to the mean threshold, right, of this bullish order block that we're on the downside of. Right? We're on the downside of this bullish order block right there. If you like looking for PD arrays in the midst of chop, right? Someone can argue and say you got a high, a low, a higher high, trade down. So this is a breaker. I don't look for my breakers in there like that. I just say, hey, we're on the bottom side of a bullish fair value gap, so I'm looking for it to act as an inversion. Remember what we used to say? Hey, if you're on the top of the PD array, look for support. Bottom of the PD array, look for resistance, right? So we trade up to mean threshold, right? Tap will come very close to the breaking market structure, right? Candles of the bodies of the candles respecting mean threshold. There's your fair value gap entry, right? There's your quote unquote breaker entry for a second chance, right? And then price drops just like it hot and attacks the yummy scrumptious sell side there and trades all the way back down into that 15-minute order block from earlier in the session. And then, you know, the rest of the day, it traded back up, macro time, traded back up into the imbalance. The 1050 to 1110 macro dropped back down, came very close to the sell side, never took the sell side out, and then reversed back up, all the way back up to the new week opening gap, going into the afternoon, and then did a bunch of nothing in the afternoon. And that is the intraday price action recap, right? Spent more time over here because this is where the interesting stuff happened, right? And this area right here, I would not have been trying to participate in any other further selling in this area here, right? Can anybody tell me why I would not have been interested in any further selling at this point here? Once we drop down to this point right there, let's see if we got below that low. We did. All right. Once we drop down below that low right there, right, on this drop here, right? Why would I not have been trying to get involved in this part of the drop right there? Right. This right here would have been the last time I tried to get involved in anything off of that SIBI right there. Right? Off of that SIBI and off of that bearish breaker. That bearish breaker and that SIBI right there. This would have been the last opportunity for me. This drop down and that retracement there wouldn't have been wanting to participate. Yes, right? Because it's down there in the we're in a deep discount now, right? We're in a deep discount now, right? Because we come from here, right, all the way to there, right? We're in a very deep discount for this entire move right here, right? For this entire move, we're in a deep discount. Now, you say, okay, Tim, we said all that was a balanced price range. We can look at it from here, right? From when we leave the balanced price range right there. Okay, look at it from there. We're still in a discount for that move right there. Right? We're still in the discount for that move right there. Right? Only time it's not in the discount is here, but now we've come this far. Right? We've come this far and we've traded back down into a higher time frame anticipatory reactionary point. Right? Y'all remember what that is? What higher time frame anticipatory reactionary point that we trade into from this move on down right here? Right? What higher time frame anticipatory reactionary point did this move push us down into? Right? This move actually took us there, but this move here pushed us deeper into what? What higher time frame ARP? Speak to me. Don't nobody know? Don't nobody know? Was it the 4-hour propulsion? No, it's on the screen. It's on the screen. It's on the screen. Which one? Which one here to learnership? Both of them 15. Which one? Help out, Marco. Which one? She said the order block.
Buy side liquidity?
Huh?
Buy side liquidity?
No, which order block? Which 15-minute order block that did this price move right here push us deeper into? Like I said we had come to an anticipatory reactionary point, and I said that I wouldn't have been looking to participate in going short because this move here just pushed us deeper into a higher time frame anticipatory reactionary point, right?
Correct.
And so it's this bullish order block right here. All right. This is the bullish order block. Remember that morning when we said that's our change in the state of delivery? Right? It was like, this is our change in state of delivery. It's the bullish order block on the 15-minute. Let's go back and look at it. All right. For those that do not remember, this guy right here. Right? So when we push down into, we hit the bullish order block there, and then this is the move here that pushed us down deeper into this order block right there. Right? So now, how far below this order block can we go? Right? We got an order block down here, right there at a change in the state of delivery. Right? So At this point of dropping, I'm not trying to chase the short anymore, because you can trade up in here, but me personally, I'm not trying to chase the short because the risk to reward is not there. I got risk all the way up here and reward right there, right? The risk to reward is not there no more for me. So this move down is pushing us deeper into this order block right here, right? And we're heading toward what? How far can we go? We got to change state of delivery there with this bullish order block, right? So then once price trades down, price pushes back up into the range, right? Pushes back up into the range, then trades down. During the macro time, right, we come down, take out the sell side. During the macro time, we consolidate there for a while, spool down, take out the sell side, and then we get us a reversal here. Boop, boop, fail to take out the sell side, right? Fail to take out the sell side, and then we start to mount our reversal here, right? Push up above that high right there, right? That's your breaking market structure right there, right? And then we trade back down into this imbalance here, blast off again, right? Get another for the entire move, right? So from this high to that high, that gives us a bullish breaker right here, right? So for this entire move right there, that gives us a bullish breaker there. Trade back down into that imbalance and that bullish breaker, right? And then we trade up, taking out that high from the macro time there, right? Trade back down into what? That bullish order block on the 15-minute there. Trade back down into it there. Push up, take out that high there. Consolidate there for a while, right? Price drops down, takes out the sell side right there, right? Blast off. There it is again, right? What is that? What is this right here? That old signature, right? Price drops down below the sell side, and then price immediately rips their face off, right? And then price trades back down into the range. Trades back down into the range there, right? Right back there at that bullish breaker, right back at the relative equal highs, right back at pick your PD array of choice, traded back down into this inversion fair value gap right there, traded back down into that reclaimed fair value gap right there, right? Pick your poison. Got a reclaimed fair value gap right there on the 15-minute. You have an inversion fair value gap here on the 1 minute, right? That's the high of it. That's the low of it. Change the color of those lines so you can see those, fatten it up, right? That's the low of it right there. That's the high of it right there, right? Trade back down into pick your poison, right? Inversion fair value gap, reclaim fair value gap, right? And push back up, going into the macro time, taking out the buy side above the high right there inside the 1:30 to 2 o'clock opening range, right? Going to the 1:30 to 2 o'clock opening range, taking out that buy side, trade back down below the sell side, trade back down to the first presentation fair value gap, right? Trade into the first presentation fair value gap, push up to the high of the reclaimed SIBI, because remember that was inversion. Trade up to the high of the reclaimed SIBI, drop down, right? What's that old signature, right? Price comes down, forces them in, immediately rips their face off, right? Immediately rips their face off, trade back down into the imbalance, trade back down into the order block, and then take off at the end of the day, taking out the buy side there and falling short of the prior day high that we had traded above up there, right? Falling short of that prior day high, coming back up. Did we get there? Did we get there? No, we didn't. We made it to that one, that the one we had, the institutional order flow entry drill right there at that 1024 SIBI, right? Traded back up to that 1024 SIBI at the end of the day. The same one where we had the institutional order flow entry drill. And what is that? What is that right there? That's a swing high inside what? An imbalance. Tasty to the algorithm. Now that is it for the price action recap. Thank you. You're far too kind. Does anyone have anything for me? Right? Anybody in the Discord got any questions? Anybody on Al Gore's internet got any questions? Thank you. So good. Okay, glad you enjoyed it. What TF should first fair value gap be looking for? Okay, that's one way to ask it. The first presentation fair value gap, you treat it just like any other PD array. If price is trading near it, you look for it to support your bias, right? If you're trading near a first presentation fair value gap and you're bearish and you're above, what time frame? I look for it on the 1 minute because I'm trading intraday. But if you have a 5 minute that's right there in close proximity of the 1 minute, right, you can default to the 5 minute if that's your time frame that you're watching. Price is fractal, right? Price is fractal. So if you don't go down to the 1 minute, you can watch the 5 minute. If you don't go down to the 5 minute, you can watch the 50, whatever time frame, whatever your lowest time frame that you watch, right? That's the one you're looking for, right? That's the one you're looking for. So don't feel like, I got to go to the 1 minute to get that. No, price is fractal, right? Price is fractal. But I got it. Time frame, right? Time frame. Y'all be hitting me with the abbreviations. You know what I'm saying? Y'all be hitting me with the abbreviations. I'm sorry, y'all. I see the light kind of bright on that side over there. So it's like making the green screen like. It's making the green screen like that crazy. You ain't gotta say my bad. It's just the abbreviation. It just caught me off guard. All right. What else y'all got? Y'all got anything else? This was wonderful. It was wonderful. You're welcome, Max K. It was wonderful, Deborah. Deborah, do Sherwin like it? Ask Sherwin, was it wonderful? Ask Sherwin if it was wonderful. Was it wonderful, Sherwin? All right, I don't see nothing else in the chat, man. I guess y'all good. You're welcome. He cooking. All right, tell Sharon to email me my plate. What we having tonight? What we having tonight? I want some scalloped potatoes. I want some scalloped potatoes, some barbecue chicken, and some broccoli and asparagus mixed fried in the pan with a little bit of spinach in it for the vegetable. Tell Sharon to hook that up for me. Explain again breakaway gaps. A breakaway gap, right, is a gap that you don't want to see price trade back to or you want to see the greater portion of it left open, right? You want to be looking for breakaway gaps when you hit key levels, right? I call them anticipatory reactionary points, but it's a higher time frame PDub. Whatever your structure time frame or higher, right? If it's a daily, if it's a 1 hour, if it's a 4 hour, if it's a 15-minute, whatever, anything higher than your entry time frame, you know what I'm saying? The higher the better, right? When you come into that area, right? Let's go back over here when we traded into that daily high. Let me take all this stuff off the chart so I can mark out yesterday's high and try to explain it in a way that I don't confuse Ramon. Hey, is that oh, that's Raymond. I always do that. That's Raymond. Cause I always do that when I see Raymond and Ramon. Okay, so this was the high. That was the prior day high right there. That was Friday. Right. Let's get this candle out the way. Okay. So now we're going to go back down to the 1 minute. All right, we're going to go back down to the 1 minute. Okay. So now this that black line right there, right? That black line right there represents a higher time frame PDub, right? It's a higher time frame PDub. It is a prior day high, right? Higher time frame PDUs, I call them anticipatory reactionary points. Why? Because I'm expecting price to react at this level, right? How am I expecting it to react? I'm expecting it to give me some type of indication of what it wants to do, right? All this is very important. Like when it comes to ICT concepts, there's never just this is a breakaway gap and that's all it is to it. This is a breaker and that's all it is to it. It's never that simple. It's always based behind the narrative. What's the narrative going into it? Okay, so at this point in time, we are trading up this right here, this green window right here, right? Y'all remember what we said that was? We said this right here, I got it huge. We said this was a macro window. God dog it. We said that this was a macro window. Right? A macro window is a 20-minute time frame from 10 minutes before the hour to 10 minutes after the hour. In this case, it's 9:50 to 10:50, right? This is a macro window. During this window, price will spool towards liquidity or an imbalance, right? And in this case here, right, coming into the macro window, price spooled to liquidity. What liquidity did it spool to? Our higher time frame anticipatory reactionary point. This is a daily high, right? The daily high, when you're in an extreme premium, right? You're in extreme premium and you have not been running sell side, right? You're building up all of this trend line liquidity right here, right? From this low all the way up to there, you have not taken out any lows, right? You're building up all of this trend line liquidity. We're in extreme premium and we're coming into a daily high. This is a key spot for a possible reversal. Okay? Key spot for a possible reversal. Now, what we got? We got macro time, took out liquidity, traded into liquidity. The liquidity that it traded into was a daily point that we're anticipating a possible reversal because we are in an extreme premium and we have not taken out any sell side throughout the entire morning, right? Got the narrative, right? That's the narrative we in, right? At the end of the macro time, we end the macro time by trading back down into an imbalance, right? Trading into a bullish fair value gap, and then we displace away, right? When we displace away, anybody who wanted to participate in the long and was afraid they missed it, they're waiting above this daily high to say, hey, if we break out, we're going to go to the moon, right? So they get forced into the market right there, right? As soon as they get forced into the market, then the algorithm immediately makes a SIBI, right? It immediately makes a SIBI, okay? So now that it makes a SIBI there, we're in an extreme premium. Once we create this SIBI here, right? Let's get our SIBI, right? We create the SIBI, meaning a bearish fair value gap. SIBI means sell side imbalance. SIBI means sell side imbalance, buy side inefficiency. SIBI, S-I-B-I. A BISI, or a bullish fair value gap, is a buy side imbalance, sell side inefficiency. BISI, SIBI. Okay, so we create the SIBI right there, right? As we create the SIBI, this candle right here does not attempt to go back up into the SIBI. We immediately expand away, right? Immediately expand away from that SIBI. This candle right here gives us a clue that the algorithm may use this as a breakaway gap because it's not showing any willingness to go back up into it, right? When we move away like that right there, it's not giving us any willingness to go back into it, right? So then we create, right, another SIBI right there, right? Once we create this SIBI, right, our anticipation of this being a breakaway gap is heightened, right? We like, oh yeah, I definitely don't want to see that traded to because we created another SIBI right there, right? We created another SIBI right there. And not only did we create a SIBI right there, then this candle right here, when we trade away from there, right, now we see this as a balanced price range, right? Because we offered buy side delivery, sell side delivery, and then we left it on that candle there, and then we create another SIBI. So when we create that SIBI right there, that's our confirmation that yes, this is a breakaway gap. Yes, this is a balanced price range. So price should not touch that until it go do whatever it need to do to the downside, right? And then we end up with 1, 2, 3 breakaway gaps in this instance right here. This one here with the institutional order flow entry drill, we didn't fill it, breakaway gap. This one here that we didn't touch, breakaway gap. This one here that we didn't touch, breakaway gap. It was left unfilled. But just the idea of trying to anticipate if we wanted to be a breakaway gap, it all starts with the narrative. Do that make sense, Raymond? Or did I just confuse you? Make dollars. He said and make dollars. Very clear. You're welcome. Anything else? All right, anything else? Deborah, tell Sherman I'm waiting on that barbecue chicken and scalloped potatoes and broccoli, asparagus, and spinach sauteed up in the pan. I want my vegetables sauteed up in the pan. Why does asparagus make your pee smell funny? Do anybody know why asparagus make your pee smell funny? Deborah, you're a nurse. Why does asparagus make your pee smell funny? Deborah, are you already eating? Or are you still here?
I am not sure, but it
Oh, you don't?
does.
Huh?
I said I'm not sure, but it does.
Oh yeah, it do. I guess that'll be a question for a dietitian, I guess.
Yeah.
Most dietitians they fake dietitians on IG, so they don't know nothing. All right. That's it. I don't see nothing else in the chat, man. That's all I got. I appreciate y'all for hanging out with me again. My name is Timothy Lee Rogers Sr., aka, let me see, asparagus makes urine smell because it contains asparagustic acid, a compound that breaks down into sulfur-containing byproducts when digested.
Sounds good to
I
me.
know you had to put that into GTP or whatever they call it. You did not know that off the top of your head. Here to learn a show. Because I never even heard of asparagusic acid. You ever heard of asparagusic acid, Deborah?
It sounds right.
I'm saying, have you ever heard of that word?
Do.
That asparagusic. You ever heard of that acid?
I felt like it was some type of acid, but I wasn't sure what.
You see that, Deborah, a whole RN, LPN, RFQ, ZD, DR, DDS, all of that. Whole doctor. And she ain't never heard of asparagusic acid. Hey, man, I appreciate y'all, man. Hey, I like talking about this stuff. It gives me great pleasure to share my understanding of it. And it gives me great pleasure to hear people say, man, I got my aha moment, right? It ain't about trying to get rich off people who trying to get out the rat race. It's about trying to help as many people as possible, right? As many people as possible. If it's for you, you'll tune in. If it's not for you, you won't tune in. And my feelings won't be hurt, right? So, until the next time I get on Al Gore's internet and share my thoughts on this thing they call price action, this your boy, Timothy Lee Rogers Sr., a.k.a. Grande. That's Big Spot if you don't hablo Espanol. And y'all be safe out in these trade streets, man. I'm gone.